Zoetis has been doing pretty great on its own since it was spun off from Pfizer in 2013. The stock is up 440% from its IPO price of $31.50 a share despite being down by almost a third from its 2021 record. With annual revenue expected to approach nearly $10 billion in 2025, the company is the world's largest producer of medicine and vaccinations for pets and livestock. The problem is that market leaders are rarely cheap, and Zoetis is not an exception. At $170 a share, the stock trades at a forward PE of 27. This is quite expensive for a mature company growing sales and earnings at mid to high single-digit rates. And while overvalued stocks can remain that way for a long time, we think that this Elliott wave chart should put the bulls on alert. We've already shown our readers that the 2013 to 2021 uptrend in Zoetis stock took the shape of a five-wave impulse pattern. According to the theory, a three-wave correction follows every impulse. And indeed, the stock was cut in half in 2022, falling from over $249 to just above $124 a share. That sell-off can be labeled as a simple ABC zigzag, where the five subwaves of the A-wave are also visible. Unfortunately for the bulls, the following recovery had been limited to a three-wave structure as well. It looks like another zigzag correction, whose wave B is an expanding triangle correction, while wave A is another impulse, marked 1, 2, 3, 4, 5. Wave C is best thought of as an ending diagonal. Taken together, these two three-wave sequences in waves W and X imply that a third one in wave Y down might have just begun from the 61.8% Fibonacci resistance level. If this count is correct, the stock is unlikely to stop falling until the bottom of wave W is breached. This translates into downside targets below $120 a share, a price much closer to fair value given Zoetis' modest revenue growth rate and mature industry.